Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's August 6th. This will be our chart lesson for the day, and this is going to wrap it up for the week. No chart lessons on Fridays. I just have to have a break. It gets to be repetitive to do this 5 days a week for years, so I started taking the Fridays off a while back for any of that are new, and occasionally, if the weather's bad or I'm bored, I may still do something on Fridays. But for the most part, you probably won't see a Friday chart lesson. It just, like I said, it just gets to be so repetitive. And even though you only see a 30-minute video, there's a lot more time that goes into these things because I have to record it and process it and then upload it. And by the time I get done, I spend an hour, hour and a half every day doing this. So it is a little bit time consuming. Somebody else suggested that start doing these live, and I've thought about that and looked into it, but I just hadn't had a chance to really spend a lot of time with that. We may do that at some point, but it's probably going to be down the road. Reason being is that if I want to do it live, I probably got to commit to a certain time. And, I try to get these up. I'd like to do this thing between 2 and 3 every day because we really stopped trading at 2. And that's when I stopped marking the trades at 2 o'clock. So I'd love to do it between 2 and 3 every day. And half the time it's 5, almost 6 before I even start recording. I mean, it's 10 till 6 and I'm just now starting this recording. And I just can't get to it any sooner. I'm just so swamped with so much going on. And so trying to do it live creates another issue is that really, I mean, it would keep me from having to upload the video and process it and all that. But it's just a lot of other logistics that I'm not sure about yet. So it's not something that I'm going to rule out, but it's probably not going to happen right away. So another thing, somebody asked me why the videos aren't in 1080. That he's saying he's only able to view them in 720 at the highest rate. All of these videos are recorded in 1080 high definition and processed in 1080, and I'm uploading them as 1080. I did some research, and the only thing I can find is it says it takes a while for YouTube I guess when they first process them, their SD, which is probably 480 or 720 or something, but uh, within a few days they're supposed to be 1080. So I'll look into that. As far as I was aware, they were all 1080. If anybody knows any tricks or there's something I'm not doing to allow them to be shown in 1080, just let me know. Maybe it's the length of them, and for them to be high def, they're too long or something. I don't know, but I'm definitely recording them in high def 1080, and I'm definitely processing them as 1080, and I'm uploading them as 1080. What happens to them from there, I'm not sure. I'll look into it and see if there's some setting or something I'm missing, but or maybe it's just this trader that asked me because he's the only one that's ever asked me about that. So maybe it's a maybe. So if somebody wants to, if somebody's got some ideas, send me some emails and I'll look at it. In the meantime, I'll try to just look through my uh, channel settings and see if there's some setting I'm missing or something. But if any of you have any certain knowledge of maybe why that's happening, let me know and I'll try to correct it because I want the videos to be as clear as possible. When I watch them on my end, they're definitely playing in 1080 as well. So uh, it's not the fact that I'm not recording or uploading them like that. It has something to do with once they get to YouTube. So we'll work on that. Real quickly, another thing, I want to try to get to these trades and wrap it up. There's not a whole lot of trades today, so it won't take too long. But I want to get to these pretty quickly and get this uploaded because, like I said, it's 6 o'clock now, and I hate for these videos to be so long, but I end up running my mouth and can't shut up, and that's why half the time they're as long as they are. But this stuff is important. I feel like, I won't share anything with you that I don't think is important, and I'm generally not a big talker that just talks fluff. So if I'm telling you something that's usually important, um, or some issue or something somebody's requested or something, I don't just sit here and talk to hear myself. I'm not that kind of person really, but maybe y'all will disagree, but I've never seen myself as just being a talker to talk for the fun of it. So if I'm telling you something, there's something in it I feel like is important, I guess. So But one other thing I want to tell you about, notice there's two red lines here. And I've had this discussion with at least two or three traders today, and they were thinking that I'm thinking their line's wrong, and they're thinking my line's wrong. But this this line right here is the line that the new program automatically puts in there, which is the 3 o'clock Central Standard Time closing price. And the reason we want that price, the whole reason I'm looking for this closing price, is not to see where the ES closed yesterday, which is this line down here. So I added it on here. But what I'm looking for is the gap on the daily chart on the INX market, the pit S&P, and it closes at 3 p.m. So that's the purpose of the line, and Bjorn obviously understood that because that's the way he programmed this. And I will get this uploaded tonight. Before I leave, I'm going to commit to you that I'm going to upload this indicator so everybody has it, because a lot of you are asking for it. And I know a lot of you want to see this same stuff. So I'm going to put this line on here both ways for a few days, and we'll watch it and we'll see how. I mean, you can clearly see there's reaction off the 315 close, but you can also clearly see there's reaction off of the 3 o'clock p.m. close. And the original idea was to see the gap, which is this yellow line. And this is where prices open at the 8:30 a.m. time, and this is where they close at the 3 p.m. time, which that is the pit trading time for the regular session. And that's what we're looking for, the gap. So this is programming it right. Now, it probably wasn't putting it on here right in the past, and I just never really paid close enough attention. And you can see there still is reaction to the line there. I mean, if on a big scale, this is not going to be real different, I don't think. 15 minutes, there's going to be a little bit of difference, so it probably didn't matter that it was exact. Either one of them probably works. So what I'm going to do for a few days is put them both on here, and maybe we want to watch them both. I mean, that might be the key. We may want to watch them both. May want to watch one or the other. But you can clearly see this one's getting reactions right out of the gate. It's acting as support and resistance. And then once we got down here below this, well, actually you can see this one pretty soon out of the gate too. Is holding, so that's actually creating some of the support and resistance. And then it acted as resistance here, and then this one comes back, and you can see prices playing off of it, both sides, but you can see it playing off this one too. But notice the open heights playing off. These are important. These price levels are important. That's why I look at them. But really, the whole purpose was to see this gap. And really, it probably 15 minutes will probably not make a whole lot of difference on most days. Some days it might even be closer than this. So it may not have mattered that we didn't have it exactly right. I mean, I talked about that the other day. I didn't think it was plotting it exactly right. I think it was plotting some other time. It wasn't even giving us the 315 close. The one I was using was giving some other close. I don't even know what it was. But it was off a little bit, and I didn't worry too much about it because it still was giving me the basic information I needed. And so I don't want to beat this too, I don't want to get stuck on this too long, but I just wanted to explain that in case you're noticing it. Most of you probably didn't notice it, but a few of you did, and you asked me about it. So if you were wondering, that what we're trying to do is find the difference between the 8:30 a.m. regular session open today and the regular session 3 p.m. close the prior day, because that's where the gap will be that we're looking for, that prices try to fill. So I hope that's clear. And you can see when prices open here, they tested this a few times before running up and right to this point. And notice how we hung around there. We went a little higher, and then we came back down here. But you can see it also testing this price level. So is one of them more important than the other? Do we want to watch one and not the other? Do we want to watch them both? Those are questions I'm not sure about yet, but I'm going to test it for a few days. Some of you might want to do the same. You might decide you want to see something even different than what I'm looking at. But this is what I'm interested in and want to know about. I'm gonna test it for a few days. I'll let you know which way I go. If we decide to go with this line, then I may have to get Bjorn to adjust this, or maybe I can't. I haven't looked at it closely. Maybe there is a way to adjust. If we want to see them both, it's easy to add this line, and we'll come up with that. Maybe Bjorn can put that in the program too and give it a little different color. Just so we can distinguish the different ones. But I'm going to test it and I'll get back to you on it. But it's 10 minutes now. Let's get to the trades and let me get this wrapped up. I'm going to back out. You can see clearly that it looked like it was really going to be a range day, but there's a brown upward trending channel here. You really didn't need this. It might have helped you find this target. Actually, it probably wouldn't have helped you find that target because it was really hard to know exactly where the midline, because we don't have a lot of touches of it. So I don't know if the brown channel helped you. I put it on there. A couple of you asked me about it. You had it on your chart, and yes, it does look valid to me. I see it as well. You didn't find it till here, but you were better off playing the sideways stuff at the time and then using this blue channel. So you can see it clearly played out perfectly. So I don't know if you need this brown one. I'll leave it on there. We're going to back out where we can see things a little better, and it won't really matter if it won't look so cluttered at that point. And we were looking for, let me back out again. Notice this was your first leg up, and so we were looking for a measured leg up. Actually, we probably should have measured from here in the end. And guess where that gets us? Right back to the top, and you can see that's where we got a little correction before we went on higher. So that would have given you this target right back to the top. You always measure it from the lowest point, and that turned, at the time when I had this early this morning, that was right here. But as the day went on, it moved down to here, and you can see where that target is. And you can see we did correct there, but there was resistance there anyway, so we probably would have corrected here regardless if you had this, measured move or not. So let me back out of here. And you can see 7 o'clock came right in here. There's a higher low. This is really tempting to go long, but this is a clear downtrend, and this channel's still in play. But you would be expecting prices to come back to here, and this channel is playing out perfectly so far. We end up just shooting right on through it and never looking back. But you still got to be careful going long in a downtrend. So if you took that trade, I'd probably be okay with it. It would, if you took this trade, it's definitely aggressive, but if you took this one trade, that's all you needed all day. That would have been a perfect, I mean, you could have had a nice, easy, quick runner, and you just ride this out, at least till we started going sideways. So that was a great setup. Like I said, it's a little aggressive. There's a failed second entry short here, but too far away from the EMA. It would have worked, but you can see it didn't get much further, and it comes back to the EMA, and that's why we wait. And I know at least one of you got burned on this second entry right here. I didn't get a lot of, usually if it's one that fools a lot of people, I'll get 4 or 5 of you asking about it. But you can clearly see there's a first entry and then a second entry. But hopefully most of you can see, look, there's 1, 2, 3, 4, 5 bars stacked up side by side. 2 of them don't really have a body. Anytime you get 3 or more bars without, and at least one of them doesn't have a body or a very small body like this, that's congestion. And it works just like a range. So if you try to go long out of it, it may fail. If you try to go short out of it, it may fail. And that's what happens. It fails out the top, fails out the bottom a couple times, and then goes higher. Now, by the time you get to here, you've come down here and bounced once, twice. This is the 3rd time. So you made a little lower low here, and when you close, you're on the other side now. So you might take that long. This is actually engulfing bar, and this was really the highs across here. This was like a failed breakout. So you might have even gone long 1 tick above that. It's a little aggressive because it's in congestion, and it could do the same thing again, fail again. And I try to tell people, if you just stay out of these trades, you'll save a lot of losses. Now, you'll miss some trades like that one, but you'll save a lot of losses. So, but notice how we're just continuing to work in this same range right here. And prices are working back over to this trend line. And notice that we got this low we made with this range, and we come back, we test it once, we test it twice, and we got a little tiny bar right down here at the lows, plenty of room. I like that one. And that looks like a doji, but that bar closes in its upper half, so that bar is good enough. It's a small bar too, only 5 ticks. We don't get many like that anymore, so it's very low risk. You might lose 7 ticks if you're wrong. But look how many times we bounced right there. And then we do it again, and this one's right at where I had the trend line marked. And it goes right back to the same place, then comes back and gives us another opportunity. The only problem with this one is that you really limited on the amount of room you got here. I marked it. I meant to change that to green. Let's just go ahead and change it so there's no confusion. You don't have a lot of room there. Now this is your highs up here. This is just that 315 close or whatever, so don't confuse it. So the question is, do you have enough room? And if you do, you may take that trade. You might let it break higher and try a limit order. But you got to be careful going long, because you see it didn't go far and it turns back down again. And now you got a triple test to the top. Notice you made the high, you test it once, you test it twice. You got plenty of room back. I like going short right there. Then it comes back down here, and lo and behold, it tested again. So again, as long as you got room, go long there. I mean, this is tried and proven every time it touches it. This time it doesn't hold up, it just keeps going. That's why you don't buy it blindly. You wait for a setup. It takes on off. And notice you got another little range that sets up, and you're right off that trend line still. And you got a triple. Notice you made that low. I don't have my line there, but you can see the red line. That's what there it is. Made the low, you test it once, you test it twice. You got a really bullish bar right at the key entry point. Just go long there. It's kind of questionable if you got room here, but you can see just about every time it's going much higher. So that's the reason that one's green. But then you make a first entry. Notice that's a new swing low. That swing low is lower than that one, so that the count starts 0. So first entry, second entry, it fails, and we're not looking for second entry shorts, but if we see a failure, it's probably going to trap people that don't know any better, and we're going to use that to go long. And that's what we did right here. New low, first entry, second entry. So if prices, and notice prices are finding strong support right across there again. Nice bullish bar, closes on its very high. Prices break higher, go long. And you might let it break higher and try a limit order to get a little better price than you could have here. It came all the way back. So you probably could have entered within a tick of that low right there, higher, and got in and given yourself even more room. But a lot of times you're going to miss the best trades trying to sneak in and be conservative. So just put your buy stop there and go with it. And people ask me that all the time lately. Why don't you use a limit order? Well, the reason we don't use a limit order is because a lot of times you won't get filled on a limit order. Prices will move too quickly and you won't get filled. If you use a stop, it actually converts to a market order and you're guaranteed to get in. And what will happen is on the very best trades that move super fast and don't look back, if you try to enter with a limit order, you're going to miss those. And that's where you get your best runners. So we can't afford to miss those. And your safety stop always has to be a market order or a stop order, because you need it to be a market order, because if it dropped real quickly, let's say you went long right here, or let's say you tried to buy here, there was a setup and it fails and it drops real fast because it traps people, or these traps or whatever. Or let's just say you went short here. Notice how that rocketed up, and so yeah, you don't want your stop to get run past, and because if you had one of those days, I mean, every now and then you get one of those days where prices rocket off, something crazy happens, some news item or something, and you don't get out of your trade. So always use a stop, a buy or sell stop on your safety stop. But anyway, prices move up and then they come back and they test this bigger brown channel. And that's probably when you'd have found this channel. You probably would have drawn it here. You might have been drawing it on each of these moves down, but it finally holds here. So you finally get something here. But anyway, it bounces here. You get a first entry, it pushes through. You get a second entry, and that's a failed second entry short that breaks lower and turns and goes out the other side. Go long there. Hopefully you get a reversal. This one doesn't take. It comes back and it wants to test these price levels here again, and it does that. You actually get a second entry here right off the trend line that confirms it. Notice that new swing high, that one's higher than that one. At double top, you can count it either way anyway. So even if that's equal, you can still count that as zero. First entry, second entry long right there. Quick, easy scalp, and then it comes back down again. And this is why we scalp out and try to get a runner, because sometimes they'll run your stops. And if you didn't scalp out, then you had what was a winner turn into a loser. So that's why we do that. And you get a, here I would wait on a higher low because we've got no precedence down here really. And your higher low is too bearish. There is a failed second entry short there, but now you just in a range and you don't have room to get out. So there's just really no entry there. You do get this new trend line right here working up. And we finally get a second entry long there, but signal bar is not any good. If you had a good signal bar there, go long. Then we had a higher low right here. That's where I'd want to go long. And we did have a little congestion. That's a little failed breakout, but that's like a little breakout pullback. But it's right off the key entry point. The EMA and the trend line all running together. And again, you got a double bottom, so a new low. So you could treat that like a failed second entry short if you wanted. I don't like it because it's not at the EMA, but it is off the key entry point, the trend line. So you may take that trade. It would have worked. We come back again here, but too bearish. Finally come back here again. That's just the first entry, but look how tight that is. Originally, I had the channel real tight here, like so. But obviously, as it moved on, it was pretty clear that I didn't quite have it right, and we adjusted it. It's like that. And you can see that midline holding. But the trend line was correct. We didn't change that. But notice how shallow all of the corrections are. They're bouncing right off the key entry point. Notice all the stems on both sides. That right there is a very strong move, and you can see how it accelerates. People that understand and are used to seeing prices recognize that acceleration. And so if you see that and understand it, you wouldn't want to take that one away from any key entry point right into that overnight resistance. So you couldn't take that one. But any of these other corrections that you got a good signal bar off this midline, if you had one, you could take it. I didn't mark them, but you could take them because look how strong that is. It doesn't really, when you just look at it, it doesn't really look that strong. But if you back out and look at that move up. No corrections are more than a few ticks each time. And look at all those stems. When you see that, it doesn't really look like it, other than the fact that look at the EMA pointed straight up and prices can't even get back to it. That's a strong, strong trend. And when you see that, if prices are bouncing off this key entry point or the midline here several times and you get a good signal bar like right there, you could go long right there, maybe even right there. It's off that midline. But definitely that one. But you don't want to go long up here. Once you've touched this, you don't know what it's going to do, and it's not long till it's coming back. But notice here, even here, how we just went sideways back to the trend line. That still shows the market's still a lot of buying. We're just finding resistance here. So again, you don't want to buy this one because it's just in the middle of nowhere basically, and it's right into this blue line, which is the overnight highs. So you don't want to go long into that. So that's what I saw today. Again, it was a little quiet this afternoon, but if you understood what this trend was, like I said, if you got a good signal bar off any of those key entry points, take it, because that's the best you're going to get. Notice how there's no big correction until after we've touched this high side. Then we start to see a little bit. Even then, it's not a real strong correction. That's a strong trend up, a strong move. For whatever reason this afternoon, from about 11 o'clock on, this market was really strong. We finally got through that resistance there. And somebody else pointed out to me today, we're almost back to all-time highs. I think it's about 30 or 40 points higher. My guess is we're going to test it. We may back up a few times before we get there, but I'd be shocked if we don't test that previous all-time high. And I mean, it's just hard to believe we're already back to all-time highs almost. So this market just never quits. But one other thing I wanted to mention, most of you have told me your charts look just like mine now. A couple of you have written back and says, hey, I'm using NT8. I've got in-to-day box checked. Remember, just go into, actually, no, it's not there. You want to go into your data series and break at end of day. You want to make sure that's checked. So be sure that's the one you're looking at. But some of you have told you with no uncertain terms, yes, that's checked, and my chart doesn't look like yours. But what's probably happening is you're using either a different broker, maybe a different, some of the things that could still affect it. If you got a different broker, it might look different. If you got a different data provider, it might look different. If you don't have a good internet service and your internet's losing some ticks, that could cause a difference. So this is still not 100%, although more people have told me their chart matches mine bar for bar all day long now, and we've never had that happen ever before. So there's something to the end of the day. It works, but there's still factors that could keep yours from working. So if it doesn't, don't worry about it. There's nothing you can do about it. I could take your chart. Anybody that can read a chart could take your chart and trade it just as easy as I can trade this chart. Sure, some of my trades might be different than yours, but some of them will look better on my chart. Some of them will look better on your chart. It all works out in the wash. Don't worry about it. It's not a factor. The only problem is you can't follow me bar for bar and know that you're seeing the same thing I am. But once you learn to read this chart, you can trade either one of them and do just as well on either one of them, I promise you. So don't be concerned about it. If you got the same, let me back that statement up. As long as you've got a similar number of bars and your patterns look the same, and it's just your bars that are slightly different, it's not a concern. Don't worry about it. Now, if you don't have the same number of bars and your patterns look totally different, then yeah, you probably need to adjust something else. And you might need to go to raise your ticks to 22 or 2300 or drop them depending on if you have less bar, or it just depends on what your issue is. But generally it's going to come back to your data provider. You can't skimp on your data provider. If you're using Interactive Brokers data, you're trading with junk, and you're going to get burned. You're not going to make money trading because their free data is junk. And so I know that one for a fact because I've tried to look at it. Unless they've changed it or improved it, I wouldn't even waste my time. So, but a few years back, I looked at it and it was horrible. You can't count on it. It's not reliable. But anyway, we're almost at 30 minutes again, so I'm going to wrap it up. We're probably done for the week. I'll probably talk to you on Monday. But I'm going to wrap today up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.